Well, welcome back to Global Money Talk live from the New York Stock Exchange. Investors are still debating how big the Federal Reserve's interest rate cut will be next week. The central bank officials will be meeting next week starting on the 17th with the rate decision expected on Wednesday afternoon at 2 p.m. Eastern Time. We'll, of course, be keeping an eye on economic projections as well as comments out from Fed Chair Jerome Powell. Now, this week we got mixed data on Thursday, including a slight rise in U.S. producer prices and an increase in unemployment benefit applications, only adding to uncertainty. Well, joining me here at the New York Stock Exchange today is Pandl, Head of Research at Grayscale. Zach, great to have you here. Thank you so much for joining me.
It is my great pleasure to be with you today. Thank you.
Well, we're here on a Friday morning and only hours until the end of the trading session, at least for the U.S. equity markets, and we've seen so much volatility. But of course, all eyes are on the Fed Reserve meeting taking place next week. A lot of anticipation, especially given that there are expectations for rate cuts this year heading into 2024. So first and foremost, what do you expect to see next week?
Absolutely. Well, you know, Bitcoin trades 24/7, so our markets, crypto markets, will be looking ahead to this event even over the weekend. Look, this is a long anticipated first rate cut, long time coming. The Federal Reserve started to signal an intention to lower rates really late last year, late 2023, and only now they're getting around to delivering it. My own guess is that they will go by 25 basis points as a first step. I think the economy looks okay. Growth is definitely slowing down. Inflation has come down yet, but there's no reason for the Federal Reserve to panic. You've seen some debate in the last couple of days about a 50 basis point move.
Yes.
Look, it's possible, but the Federal Reserve typically does not deliver big surprises to markets right at the day of the meeting. I think 25 basis points and a strong signal from Jay Powell that more rate cuts are coming is the most likely outcome. That should be pretty positive for things that compete with the U.S. dollar like Bitcoin, but I'm sure we'll come to that.
Absolutely, and it's really interesting because if we think about what happened overnight coming into this morning session, we saw that expectations for a bigger rate cut, meaning more than 25 basis points cut from the Federal Reserve, had escalated in terms of the percentage expecting a bigger rate cut. Of course, we're waiting until the Fed decision day, but also to keep in mind is the fact that 2024 is a U.S. presidential election year, and this week we're paying attention to what both candidates, Harris as well as Trump, had to say. And I think a lot of people in the crypto community, they're waiting to hear whether or not either candidate would touch on crypto, but we didn't quite get that, did we?
No, you know, the debate was very interesting this past week, and of course many important public policy issues were discussed. But I think the crypto community was probably a little disappointed that you didn't hear anything about Bitcoin or the crypto asset class specifically. Maybe that's not too surprising. There's so many things to talk about. Sure. But even beyond that, you know, we would have loved to hear a little bit more clarity about what each candidate plans to do about the economy, about inflation, about fiscal policy and the deficits, about the movement of capital overseas, regulation. All of these things that affect the U.S. economy can affect the U.S. dollar, and therefore they can affect assets that compete with the U.S. dollar like Bitcoin. So maybe a little bit less on crypto, a little bit less on the macroeconomic policy plans of both candidates than maybe would have hoped, but that's okay. I still think the election is a really big moment for our asset class, crypto investors eager to see which way it goes. And I think either way, whether Donald Trump wins or Kamala Harris wins, the White House, either way, it's going to mean something for our asset class and help us grow over the coming years.
And you bring up a very important point, because I think Americans across the nation, they want to hear more when it comes to policy, because it is going to affect them. And there are voters out there who are still trying to decide, are they going to cast their vote for Trump or for Harris? So that is something to watch. And taking a step back to the summer, it was very, very eventful, and I think when we saw certain market moving events before the Monday open. We saw a lot of movement when it comes to crypto. For example, when we take a step back and we look at the attempted assassination of Donald Trump, we saw that move in Bitcoin and that reaction. So for viewers out there who may not be familiar, can you walk us through why it's a 24-hour market,
Absolutely.
what it means, and what viewers out there can glean from this?
Great question. I'd love to touch on that. The crypto market is based on a particular type of technology called the blockchain.
Yes.
And this technology allows us to make financial transactions any time of the day, even when banks are closed, on the weekends, and these transactions settle more or less instantly.
Sure.
They don't take T+2 or now T+1 like transactions around here. They settle instantly, and they can happen anywhere in the globe. You know, they're the same experience, whether you're transacting with someone in the United States at the New York Stock Exchange, or whether you're transacting between someone in Korea and the United States. It all works on the internet, and so the system functions regardless of those same parameters that we're used to in the traditional financial system. So that's one of the reasons that somebody like myself, a financial markets economist, is so excited about the crypto or blockchain asset class. You learn about how the traditional financial system works, and this alternative structure, I think, is a more modern approach that better suits us for the sort of needs that we're going to have for our financial system in the future. Now, what does this mean for people today? I think what it means for people today is that, yes, things like this, events that happen on the weekends, for example, or things that happen overnight, are things, you know, we can use the crypto market to exchange risk, hedge our portfolios, express positions, even when the traditional market is closed. So that's one reason why it's relevant for people today. But I think investors, consumers are going to get more and more exposure to the crypto blockchain space over time, and I'm very excited to see that play out as people learn about the asset class.
And here in the U.S., of course, we're paying attention to politics in D.C. when it comes to the presidential election. But of course, our eyes are also on Congress. And when we take a step back to earlier this week, there was a hearing on Congress on DeFi. So what did you make of that gathering?
Well, first, it is terrific to see these important issues get debated in a formal way in Congress. And you know, in general, of course, there are left and there are right issues, but in general, I would argue we have seen a mostly bipartisan approach to the industry in Congress especially, and we'll see how this shakes out at the presidential level. But certainly in Congress, it's been a bipartisan focus on the digital assets, the industry, crypto, blockchain, all of the same type of thing. So, you know, DeFi is a really central use case of these technologies. There's other technologies, identity solutions or stable coins, tokenization, lots of different things that we're doing with these technologies. But decentralized finance or DeFi is a really core innovation. We have a ways to go before this becomes ubiquitous in the financial system, but I think it really is a clear use case, and people should take a look at it themselves. If you're uncertain about what these things are, whether they're worth investing in them, it's very easy for the average person to begin interacting with these tools, test them out, and just see what they offer you compared to the traditional financial system. My own belief is that anybody that tries these things is going to get excited about investing in the technology. And let me say one last thing. If investors are interested in decentralized finance, stable coins, tokenization, all of these types of things, the most straightforward way to express that in a portfolio is being long Ethereum. Ethereum is the leading smart contract blockchain. It's available as an ETF to U.S. investors, available in other ways outside the United States. But really investing in Ethereum is the way to get exposure to this theme of smart contract blockchains in a portfolio today.
And since you brought up ETH and Ethereum, I do want to zoom in on the launch of spot Bitcoin ETFs and spot ETH ETFs. So coming into this year, as you mentioned, there were so many expectations when it came to Fed rate cuts. But coming into the month of January, here on the floor of the New York Stock Exchange, we saw history being made with the launch of spot Bitcoin ETFs, and I remember being here covering that, and of course it didn't happen overnight, and neither did the launch of spot ETH ETFs. But let's start out with what we're seeing in terms of spot Bitcoin ETFs, and if you're paying close attention here, there's been concern about some of the flows recently. So first and foremost, what do you make, looking back to the beginning of this year, of what we saw with Bitcoin ETFs?
Well, great question. Of course, for Grayscale, this was a monumental occasion. Grayscale has been operating in this space for 11 years. The Grayscale Bitcoin Trust is an 11-year-old product and has always been trying to find the best possible way to give U.S. investors access to these products within the regulatory perimeter of the United States. And there's nothing easy about operating in this space. To get these ETFs listed required a lawsuit from Grayscale against the SEC that we won, and that was what allowed us to bring these products to market. So really a triumph of all the things that the team at Grayscale has been working on for many years. So of course a big moment for us. For Bitcoin, it's another milestone in its move from an obscure asset to the center of the global financial system here at the New York Stock Exchange. You know, we had the first exchanges, the first derivative products, the first loans that were made against Bitcoin collateral. All of these things were steps along that process, and the ETFs were just another big step. And I think there will be many more steps along these lines as we go forward. Now, what have they meant for the market? They have given investors much broader access, a broader range of investors access to these products. And investors that never would have considered looking at crypto, now they can get safe, regulated, low-cost exposure to these products in a portfolio. So it just offered access to all those investors and had a big effect on price. A very successful launch earlier this year. So we've been, of course, delighted to see that and think there will be more innovations over time.
And I do agree with you. It does speak to the institutional adoption of this space. But when it comes to ETH ETFs, of course, the use case is different, and some people might highlight the pros and cons. But as someone who's in the research space, can you walk us through this?
Yes. I have a unique perspective, I think, on this topic. You know, really, myself and our team at Grayscale are on the front lines of introducing the average American investor, financial professional, financial advisor to Ethereum for the first time. And I can tell you that while these products have had a slower start compared to the explosive demand that we saw for Bitcoin in January, really that is because investors are just beginning the education process. You know, there are a lot of people that have spent a decade looking at crypto and they're familiar with a lot of the terminology, but I can tell you, being on the front lines, most investors, the vast majority of mainstream investors, have never heard of a smart contract. They don't know what decentralized finance is. They've never used a decentralized application, and they're only just starting to hear about terms like stablecoins or prediction markets like Polymarket. And so our job at Grayscale Research is to help anyone confidently invest in this asset class. So we go out in the world, speak to retail investors, institutional investors, and talk about Ethereum, show them how to use these tools, explain the investment use case. I am very, very confident that education process is going to lead to a wave of demand for these ETFs. I think that not everyone has this same perspective as I do, but I'm fortunate enough to have these conversations every day with investors, and I think you will see a lot of success with these products over time as that education process plays out.
And I think education is so important when it comes to crypto, and we've been focused on what's happening stateside, but of course we're also paying attention to what's happening around the globe, whether we're talking about Europe, Asia, the Middle East, or other areas. So when it comes to the regulatory frameworks that you're paying attention to, do you think any of them could be a blueprint for the US?
Yeah, I'm sure we will get to that. Crypto is a global asset. Just like the internet, it goes everywhere, and there are no borders. There's no permissions required to interact with these applications. That is what's so exciting about crypto. From a regulatory standpoint, that raises new questions. It means that around the world, regulators are going to need to address the crypto asset class in a uniform way, similar to the way that we have banking regulation that is agreed upon, cooperated at an international level, and the internet is monitored in much the same way. We will get to that point at crypto. But regulators in different countries are moving at different speeds. As you say, Asia, Europe, Canada, you know, the United States may be a little bit further behind than some of our peers, but we're getting there. The Ethereum ETFs, the Bitcoin ETFs are a great step in that direction, and we'll see with what we get with the election. We're hopeful that, again, bipartisan consensus in Congress will give us legislation in the next Congress. That remains to be seen, but I think given the trends that we're seeing, that's a reasonable expectation, that we will get comprehensive crypto legislation in the not too distant future here in the US.
And although we're talking about the future, sometimes I feel as though hindsight is 2020. So I do want to touch upon lessons learned. So here we are after Labor Day, everyone's back. There are a lot of global events happening when it comes to crypto. And of course, we're paying attention to what's coming out of those events. But we are heading into the US presidential election, and we're awaiting Fed rate decisions, and there are expectations of bigger cuts. But of course, we had the Bitcoin halving earlier this year, and we saw progress in terms of legislation, the launch of spot Bitcoin ETFs, ETH ETFs here. But when we take a step back to 2022, we think about some of the sentiment that was out there even last year, and we saw that reflected in a lot of the crypto majors. So, Zach, can you tell us about some of the lessons learned from the most recent down cycle?
Yeah, absolutely. And I would like to just stress that the lessons learned in the last crypto kind of boom and bust cycle in most cases are the same lessons that you learn when you study financial markets throughout history. I started my career at Lehman Brothers, for example, and when a levered financial institution, whether it's a bank or a financial investment bank or a trading house, becomes over leveraged and exposed to its assets, that can introduce risk. So institutional leverage and the risk that that creates, I think, is one of the lessons. But again, that is common with other financial markets. I would say the other one, which is an old lesson, is just buy low, sell high, or as the saying goes, buy at the sound of cannons and sell at the sound of trumpets. We had a big crypto down cycle. We had a big drawdown assets. That proved to be an excellent time for investors to get long this asset class, to get involved in this asset class. So it is an asset class that has cycles. Investors have been repeatedly rewarded for investing in the asset class after these big drawdowns. And so if you're a more value-conscious investor thinking about getting in good entry points for your allocations, think about those times. If we get concerned about the asset class, if we see a big drawdown, maybe that's the time to begin allocating to crypto to give you the best chance of giving compelling total returns in the longer run.
And you touched on education earlier, so when it comes to the health or, say, fitness of this, what do you think needs to happen? What do investors, potential investors, need to be aware of?
The products are ready. U.S. investors have access to regulated, safe, cheap, liquid Bitcoin and Ethereum exposures in in an ETF structure that fit in any brokerage account. So I don't think that there's a need for investors to do any more homework than that in terms of the product structure. With allocating to any asset class, just understanding the asset, what it's correlated to, how volatile it is, what's the right amount I should have in my portfolio. So ask yourself the same questions that you would have with any other asset class. And once you get comfortable with that, and please use Grayscale Research as a resource if you need to get comfortable with that, the products are ready for U.S. investors. And I really think that any investor can benefit from having a modest amount of these assets in their portfolio today.
And Zach, as we are approaching the 11:45 point in our segment today, I do want to note very quickly that we are seeing Bitcoin higher by 3% and is edging closer to that 59,450 level, while ETH is advancing by over 3% and is higher at 2397. But doing a deep dive into the differences between Bitcoin and ETH, in terms of Bitcoin, we've been hearing about mining because there's limited supply. And when it comes to ETH, that's a different crypto major. So can you highlight some of the differences and some of the use cases?
Correct. When investors look at allocating to stocks, they think of different market segments. You have financials, industrials, energy stocks. These are all stocks, but the public companies in those categories have different business lines and have different economic exposures, so we think of them as in different industries. When investors are approaching the crypto asset class or the blockchain space, we would encourage them to take exactly the same approach. Think about all the different assets and their different use cases and what kind of categories we should put them in. So we have a framework that we developed with FTSE Russell, the index provider, the Russell 2000 that many of your listeners will be familiar with. We developed a framework that we call the Grayscale Crypto Sectors, which divides the crypto asset class into these segments, just like you find in equity markets where we have, say, financials and energy. In crypto, we have different segments. Bitcoin would be in the currencies crypto sector, and Ethereum in the smart contract platforms crypto sector. So these are the two biggest assets in our space, and they're both blockchains, but they have different use cases and should be thought of as quite different. What are those key differences? Bitcoin is essentially a digital alternative to gold. You mentioned mining. It is a very highly secure, decentralized network, and Bitcoin, the asset, can be thought of as just as secure as physical gold in our view. So investors that want that type of exposure in their portfolio, Bitcoin is a great way to begin. Ethereum is doing something differently. Also highly secure, decentralized blockchain network, also a very solid asset that is scarce digital asset. But Bitcoin is doing something, Ethereum is doing something different. It's a platform for applications. What are these types of applications? Your listeners in Korea and here in the US are just getting exposed to these things. What a good example is something like Poly Market, a prediction market that is getting more and more attention for giving us the predicted odds of who will win the presidential debates, who will win the presidential election. That application lives in the Ethereum ecosystem. So consumers are just getting exposed to these types of applications, and that's what Ethereum does. It's a platform for a new type of web application that we think will become in much more widespread use. Investors should look at having both of these things in their portfolios. We often see investors say have a 5% allocation to the crypto asset class, which can be, say, 4 parts Ethereum, 4 parts Bitcoin, 1 part Ethereum. That's a very common exposure for our clients.
And for investors out there who are thinking, should I invest in crypto? Should I buy directly versus an ETF? What are the differences there?
Yeah. So investors look at their portfolio. They typically put things in big buckets, classic 60-40 portfolio, stocks and bonds. Many more sophisticated investors will also think about an alternatives bucket, which may include private equity or venture capital or real estate or commodities. Crypto fits naturally in that alternatives bucket. It's an alternative asset class, has a low correlation to stocks and bonds, and so can be a great diversifier for your portfolio. For the vast majority of investors, the ETF products are going to be a great way to begin. Grayscale also offers private placement vehicles as well as other private vehicles. For investors that are a little bit more sophisticated in crypto, those can be a great option. But the Bitcoin and Ethereum ETFs, a great place to start, and they just make everything simple. Custody, taxes, cost, trading liquidity, all of these things are sorted out with the ETFs. Owning your own Ethereum, owning your own Bitcoin is an important part of what crypto is all about. I certainly do both things, have exposure through the ETF and some other exposures to Bitcoin and Ethereum when I'm using these networks in particular. But for the average investor, building a portfolio, thinking about their portfolio as a whole, thinking about the taxes and all the other accounts that they're using, start with the ETFs.
And I'm glad that you brought up taxes, right? Because that is something of a concern. And we all know that when it comes around to tax season, if we have sold stock, then we know that there are capital gains. But what about for the crypto space? What's going on there, especially here in the US?
The same tax rules apply for crypto. I know nobody likes paying taxes, but it is important to follow the rules. And you have to pay capital gains taxes with the gains on crypto assets in the same way that you would for any other asset. This is just one more reason why the ETFs make everything so much more simple. I hold the ETFs in diversified accounts that have other ETFs. individual securities, etc. And all my taxes are done in the same way, in a consolidated manner, just like everything else. So it makes life very easy. Now, again, we've had gains in crypto this year, so that may mean realized gains can be taxable, but it is important to hold them in these brokerage accounts in that way, so that you can look at your tax liabilities in the context of all your assets, just like anything else.
Well, none of us like paying taxes, but it is a fact of life.
And it is a fact of life.
Indeed, we are also hearing from the presidential candidates when it comes to corporate taxes as well as other taxes as well. But one thing I do want to ask you is legislation. So we've seen some progress in terms of legislation here, but as we head into November, of course, we'll see what happens in terms of the election. But as we head into next year, we'll be keeping an eye on what happens in terms of Congress and the implications. So can you walk us through what we can expect when it comes to next steps?
Absolutely. So I think the first thing to keep an eye on is who wins the Senate, and therefore who is the leading party for things like the Senate Banking Committee. A lot of legislation is going to kind of emanate from that committee in particular. If the Republicans control the Senate, you'll have a Republican chairman of the Senate Bank Committee. You may build a crypto subcommittee, and legislation ideas may start coming out of that area. If it's the Democrats, we may see a different mix of legislation. What I think that there is most bipartisan agreement on and most bipartisan energy on is stablecoin legislation, and that's because it is the thing that is most closely related to the dollar and banking payment system that we're used to today, something that is very important for retail customers, for banks to sort out stablecoin legislation. So I think that that's where it will begin. We hope that we see more than that, comprehensive legislation around the industry. We have sorted out a lot of issues this year. The status of Bitcoin and Ethereum. It's great to see these products in ETF structures, but there are many more assets in our space, really just pieces of software that need their regulatory status clarified so that investors can approach them in the same way that they do other assets. We have that for Bitcoin and Ethereum now. We're waiting on some other things. But our own expectation is that stablecoin legislation is the very natural place to start. I think we'll find a lot of bipartisan support for that the next Congress, regardless of who occupies the White House.
And Zach, for our viewers out there who might not be familiar with stablecoins, tell us a little bit more about stablecoins and also in terms of what the landscape looks like here in the U.S.
That's right. I think to understand stablecoins, you need to just think for a moment about how a payment works today. If I want to pay you $1, really what happens is that there's a debit made from my account at some bank, and it goes through a process of a multi-day process of settlement with your bank, and you get a credit in your account. So our payment system today works as credits and debits with a bank-based digital money system. In the future, that's not how it's going to work in our perspective. Instead, you will have a wallet, I will have a wallet, and I will send a tokenized version of cash directly to you. That's what a stablecoin is. It's just a tokenized version of cash, but it allows us to make peer-to-peer payments in a digital format, just like with physical cash, without using the banking system. So I think a really exciting piece of technology that's going to lower cost, create more convenience, especially for things that are cross-border. It's going to make life a lot easier for the average consumer. But it does have big implications if you are taking these deposits out of the banking system. What does that mean for banks, for example? Are there intermediaries in the cross-border payment system, money order systems and things that could be affected by stablecoins? I think this is a great technology. It's a piece of technological disruption that's going to benefit consumers, but there are some of these questions that need to be resolved, and that's why regulators ought to take a look at it. But that's how the average person should think about it. We're going to get away from a bank-based digital money system to a peer-to-peer digital money system, and hopefully reduce a lot of costs, create a lot of benefits for consumers through that technology. Stablecoins really a great example of the type of innovation that blockchain technology brings to the world and that people are using today.
Well, now that we've covered what we're seeing in the market in terms of the crypto majors, the launch of the spot Bitcoin ETFs, and also covered some regulatory things that we're watching, I do want to ask you about innovation. So I'm sure as the head of research, you're paying attention to some exciting innovations out there. So what really excites you the most when it comes to disruption in tech?
Yes. There are so many things happening in crypto that, although it's my full-time job, it's even hard for me to keep up sometimes with the pace of innovation. But I would highlight one area in particular that Grayscale has been focused a lot on that I think is a big new area, and that is decentralized AI, artificial intelligence technology. I don't know about you, but I am using these AI tools all day long for my work. I'm really blown away by the technology. But I think anybody that's using these tools regularly can start to understand some of the challenges, some of the risks that they bring, especially risks that relate to centralization. These models are controlled by small groups at large companies, and they may not be accessible to everyone around the world, and development may remain relatively closed. Blockchains brought this type of innovation, decentralization, permissionless innovation, to money with Bitcoin, to applications with Ethereum, and we think can bring the same technology to artificial intelligence technology. So we released a decentralized AI fund for accredited investors, a private placement fund that investors interested in that topic can begin to get access to. But that is really probably the hottest area in crypto at the moment, and where some of the most exciting projects are. And we think at Grayscale we have really been leading the charge as usual, giving American investors access to those products in safe and regulated vehicles.
Well, I'm glad you touched on artificial intelligence, because we know that the market, the broader market, investors, retail investors, institutional investors have been paying attention to AI, and that has driven a lot of the rally this year. But of course, we're seeing that market volatility play into that AI bet, at least for the equity markets. So very quickly, before I let you go, we got the launch of Apple's latest products, as well as expectations for Apple's AI as well, but we know that they're going to be facing regulatory challenges when it comes to Europe as well as China. So when it comes to AI and crypto, are you concerned about regulation?
To a degree, I suppose. Look, I think the technology is groundbreaking, just like public blockchains and Bitcoin. This, which is something truly different and groundbreaking. Some of these new, the AI chatbot, large language models are really groundbreaking, and I think we will figure out the regulation. But what decentralized AI can bring, what crypto can bring to this, is a sort of rules of the road that provide open access and a lot more transparency than what we have today. Really, the transparency that you get from open architecture systems or open source software. That's what crypto can bring to AI. So it's a big topic, really exciting technology. We believe that you're going to see an open AI, decentralized AI innovation driven by blockchain technology over the coming years that'll complement some of these closed source models.
Well, Zach, I appreciate your time today. Thank you so much for joining me. There are so many moving parts when it comes to crypto, so thank you so much for simplifying not just the products, the technology, but also the regulatory landscape as well.
It's my great pleasure. Thank you for having me.
Thank you so much. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SamPro TV. Every day you can watch us from 11 a.m. until noon Eastern Time. And you can also check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for all of our viewers out there for joining us. We'll see you back bright and early on Monday morning. Have a great day, and of course, have a great weekend.